What's going on, traders? Hope everybody's having a great month of January so far. Wanted to come in here and do some analysis what I'm looking at on the E-mini S&P futures as well as the NQ Nasdaq 100. My name is Shark. Thank you so much for joining me. Remember that this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. All right, with that out of the way, reminder, we're also going to look at some other ancillary data points that I like to look at that helps me form a game plan for the upcoming week or two. We also have major earnings coming up and FOMC decision. So we're going to take a look at the economic calendar and the earnings calendar as earnings season really gets underway here with a lot of big names reporting this week. And so let's get into the earnings calendar first and foremost, then the economic calendar, then we'll start to look at some weekly charts, some daily charts, and some day trading levels on both the indexes here. All right, so what do we got here? Our earnings calendar. Okay, Boeing Tuesday before the market open. That's going to be interesting. UPS as well. A little bit of that consumer spending view. American Airlines, a little bit of that going on before the market opens as well. But really, Wednesday after the close, we've got Microsoft and Meta, big heavy hitters right there. So all eyes on Wednesday after the close. And then, wait, I thought we had Tesla, excuse me. I thought we had Tesla this week. Okay. And then next day, Thursday, got Apple, SanDisk, which has really become a heavy hitter in the last few months. Western Digital will be interesting. Okay, Visa, Blackstone. We'll watch Verizon, American Express, and some of the oil names on Friday before the market open. But really, all eyes are going to be on Apple, Visa, MasterCard, Microsoft, and Meta. So, that should be interesting to see how the markets react to those earnings and SanDisk for sure as well. All right, let's take a look at the economic calendar here. What do we have this week? Well, really not too much going on. Tuesday, consumer confidence coming out at 10, but really all eyes on Wednesday, the 28th here with the FOMC Fed decision. Powell, purple tie at 2:30. And you know, with all this talk about the replacement for Powell, honestly, I'm going to miss him. I enjoy him as the Fed chair there. Initial jobless claims 8:30 on Thursday. And then a little bit more of that inflation data here. PPI coming out Friday the 30th, coming out at 8:30, so that will be interesting to watch as well. So really big things for the data, of course, FOMC, PPI overall. Those are the most important things I'll be watching for this upcoming week. All right, let's close this and start to take a look at some weekly charts here and see what we can take away from that perspective. We're just going to start off here with a blank chart and and really, you know, we've done a whole bunch of nothing. You know, we had a little bit of that, almost a breakdown really, and you know, we can call it really a failed breakdown as you know, we took out this balanced price range low and came down last week and gave everybody a nice little scare, basically right at the 6,800, right? We didn't quite get there, but pretty close. Let's look at that weekly low, 6814. So we didn't quite get the whole number, but either way, as we can see here, the bulls have come in and pushed us back up once again quite higher. So all that damage has been repaired, and really overall still it's hard to say give anybody an edge right here because we are just completely balanced. And you know, this was kind of the level that we've, you know, the zone that we've kind of been watching here and develop, and here fake break again, right? And so until we resolve, and it's pretty straight and clear, until we see that displacement up and over, it is anybody's ball game. Just don't, you know, get chopped up in this area. Be a little bit more tactical here as we kind of float toward at the top of the trend, you know, and if we certainly break down potential distribution going on, but I think with Powell and major earnings this week, we will find out which way the market wants to go. So I think that 6,800 really will be a marker there that I'll be watching quite closely here on the futures contract to see what the next move is going to be. But if on the weekly we start closing under that, I definitely think that that's going to be something that will be very important and give us the potential to see lower prices here and maybe back down into the 66 60s and potentially even back down here to this, what is this, November 17th, maybe even 60, we'll just say 6,500. What is the actual low? I think it's 65.25, right? Okay, so that could be a potentiality. Seems very far away, and it is, and because of course we are looking at a weekly chart here. All right, and Globex has just opened. Pull up the weekly chart that we do have. Okay, and as you see, we never really broke. We had this level 68.11, came down to 68.14, never really broke it, right? And it came just and retested that high from back here, the week of October 6th, though. And the lows, again, multiple reactions here this December 8th, and the week before that, the first week of December the 1st as well. So, proven area here. The sellers keep on knocking on the door, but nothing has taken place for them. And as of now, we're stuck right here. We've got a little bit of supply around that 7,000. Around that 7,000 to basically the highs, and that's what we're going to need to see. That displacement over that for that probably, all the way up. If the bulls can get over that, we'll probably go into that 7,100. All right, let's take a look at the daily chart now and start to get a little bit more granular. I wanted to do an updated video, but we've just really been going, in this balanced price range. So not too much to update. Okay. Take a look at this. Pretty clean here. Supply and demand on the daily. Didn't catch the low though. You can see that. Came into the demand zone, but okay, so I think this close, where are we right now? Right on the line here, 69.71. Right, we want to see this hold if you are bullish. Holding that, and then we still have that opportunity to come back up into the 7,000, 710s. That's really going to be a big area. As you can see, multiple points here that has hit in that zone, but unable to get up and over. But up and over that 710, give me a daily close over. We'll see you back at the all-time highs at that 7,036 there. Otherwise, if we break back underneath that 69.70, excuse me, get a sip of water here. If we do get under that 69.70, then we can talk about those lower prices once again. I think that's going to open up the door for lower, and of course we've got that 6,900 psychological level. But we could trade back down into the 69.40s here, 69.35, a very possible spot. I could see us potentially getting a bid there and coming back up to retest that 69.70 again. And I kind of like that retest trade a little bit better than being short here in anticipation of a potential break. So if we do in fact break that 69.20, then we come back up, retest it, hitting that short and trying to get back down 20, 25 points. I could see that potentially being a trade, but under pretty much that area, underneath 69, we're going to call it 69.35, right? Underneath that, back down to 6,900 in my point of view. We start to break under that, well, we'll come back all the way down here, 68.65. And if that breaks, that's when things get interesting. We'll probably retest these lows from last week. And in fact, if we can get under that 6,900, well then that's when things really get interesting. We'll trade into this area, maybe a 50-point range, 67.60 potentially on the daily there. So that is very interesting. All right, let's take a look at some day trading levels here on ES, the SPOOs. Let's go here. And we'll come up. I think we had some levels. Oh, yes, here we go. All right, you can see the daily levels kind of working. I don't have anything here as far as day trading is concerned, but they are finding a bid there on that daily level. Okay, so as long as and we'll go over the bull case here first, but we want to see buys back over kind of this breaker structure right here, right? And you can see the 69.83 so far. That's my line. So you want to see up, back, and over 69.83. I think that opens the door for longs for the bulls. Then they can go ahead, try to get up into the day's highs here, 69.95. Over that, we've got 5 points higher, will take us into 7,000, and then we get into that real pesky area we were talking about on the daily, anywhere from that 7,005, 7,010. Give yourself about a 5-point zone there. Very tricky area for the bulls, but if they can break up over, we did talk about what we expect to see there on the daily. So let's talk here about the sell side, right? Staying under that 69.83, and we're even looking at the hourly here, and the hourly pretty much lining up with that pivot though on the daily, 69.75. So really close to it, kind of hanging out right on that hourly right 9 right now. So I mean, if you are bullish, potentially it could be a nice idea here being long off that area. But either way, stay under that 69.83. I'll be looking for more downside, probably down here, 69.70, right? And that's where it's going to get interesting. Break under that, probably can come down 8 or 9 more points. The big spot here, 69.60. I have 69.61, but pretty much 69.60. Getting underneath that, then we can see sells back down maybe into Monday's open here. It might stop at 69.50, but 69.50 to 69.45 I think is realistic there for the bulls, or excuse me, for the sellers. So if you want to throw up another level right here, don't blame you at all. I just don't have one as I was doing these levels. But either way, that's where I'm looking. Potential bounce zone there for sure. We might get a bounce back up into that 69.60. I wouldn't mind a long, or at least potentially looking at longs in that area for that bounce up to 69.60 area. If we get back over that, try to get into the second area. Excuse me, 9 more points up above. And then if actually you do find that acceptance, you really got a nice trade building up for you. But if we do sell off into there, I think that's at least where you could get a nice scalp potentially back into this zone. So now whether it rejects there, excuse me, I don't know, but that is an idea. Of course, if you were long, you'd want that to come up, kind of come up there, and then go like this. But Either way, let's see what happens here on the SPOOs, from that daily perspective, and we'll probably see the same thing on NQ. Just a lot of back and forth area, really nothing signifying a new trend yet overall. Sorry about the yawns, guys. All right, let's keep it moving along here. And we'll go into the NQ weekly. I don't think that we're going to see anything as far as Powell changing anything. So the speech, will definitely be important. Okay. This is the weekly. This is on the daily. Okay, moving along right here to the weekly chart. Boom. Okay, as you can see, same type of situation here. We are just stuck. But the bull's maintaining over this 25, 670. Excuse me, 570. You could merely make this argument, maybe. Some compression here. Sure. Yeah, weekly cooled off a little bit. We're no longer overbought. Certainly could be a view. I do know on Twitter I was posting kind of a potential diamond top. So you've got that potentiality as well. It's right up on the trend line here. Again, really wouldn't matter unless we saw the break. Right? Just like this doesn't matter unless we see the break. But holding over, I think that 580 here is a good sign for the bulls. Definitely gives us the chance to come back up into these weekly highs here back at November 3rd, 26, 325. Just get over that, we'll just probably wick into the 26,400, so about 75 points or so back up over that. And if we are able to start closing, I would say even over the 26, 325 daily closes over that, I'll see you 27,000 on the NQ. It looks like that would be what I would see. The bears would really need to, and right here, we tried to break down, came into this bottom level here, 24,868. But this low last time we broke down, we barely even got close to that. So it didn't even make an equal low. There was a higher low. So I would say that's not what the bears would want to see. Let's pop this baby onto the daily. You would have to get under that level. 24,860. Then things can get interesting for the sellers. And God, I hope so, because I don't like them killing the VIX like this. Daily chart's a little bit more defined. In the potential diamond, but certainly can make that wedge asymmetrical or symmetrical triangle, whatever, as we were doing. Let me expand this, grab it. this thing would move. Try to reload. Come on. Sorry guys, technical difficulties here. Okay, 25 for, what is this, 25, 940. Pretty much the top of my zone here. Looks like a couple times we did try to break above, but it looks like it was that gap you can see back from October. Right, from back here. Did get it a couple of times, so maybe I need to readjust this a bit higher. And I think that's fair. So 26,100. Okay, we'll update that as a new kind of supply area. Now I was doing the gap, but we had a couple of times there where it did really break above, and so we want to readjust this just a little bit. Boom. So yeah, I mean over that 26K and then really over the 26,100. That can get us going back up into right 26,500 and then reaching back for those highs. Back under 25,745 I think will cause trouble on the daily. We could trade back down lower once again to the 25,400s, basically into Mondays, in today's what was this day? Yeah, in today's lows. But a lot of traffic in here. I mean, 25,550 had some reactions in this area, so it's very tricky. Even up here as well. 25,600, 615. But overall, you really can see it's just really stuck in this range. And, you know, let's just do, oh, this is the blank chart. Do we have a default? Don't think there's anything on here. Okay. Now, really, that question is it, you know, is it distribution? But you can see that swing high or swing low, and this one is higher. Uno, dos, tres, right? But today's high, you know, that compression did not reach. So really just have to wait. I mean, from that swing perspective is the only way, because you can't get more balanced than this. And I guess that 25,550 really would be the spot. Whether or not we want to decide. We want to attack the highs of the range, right? Or other. Which will it be? But Would I want new longs here towards that high? No, of course not, right? I'd much rather, if I was trying to hunt a nice position and I was of the opinion that I wanted to, that I thought we were going to go to that 27K, for example, then I would want to be looking more towards this, discount zone, the lower part of that balance range. So I really wouldn't favor the longs here to either break up over or get that discount price and come up into. And you gotta watch out too for things. This was definitely a couple of days of manipulation. So we could get the break. And then we go. All right, let's look at some day trading levels here. Supposed to be on hourly. Okay. All right, Bulls defending today on that little sell-off we had towards the end of the day. Bulls defended 844. It's critical that they hold this, right? And up and over holding that 875, 880 can look to trade back into 815, 915, 900, then 915. Up and over that will come into Monday's highs here at at 935. Up and over 935. Back up 970 in reach then, and if in fact we can get over that, looking for that 26,000 or really close to it, maybe 25,995. Either way, it might wick right into that 26K and then come back down. Let's talk about the Bulls or the Bears here. Need really underneath, right? Well, as long as we don't get over Monday's high, sure, we've got that perspective. I was on a short today up against this area. A bit lower here, probably in the 909. I think I had on the short 915, something like that. But really, the breakaway is going to be underneath that 844. And then we probably could come down. We're going to obviously make a stop here at 800. We almost got there today. But 765 going to be my next spot. I could see that potentially being the long here, about 50% retracement of Monday's range down here. Potential longs back up into 800, 825, and then 840, just retracing the steps. But I wouldn't mind trying a short if we did in fact break down, took that long, take it back up to 840s, and then look to actually a short there and see then if we can actually, because this candle here on the 1 hour, right, there's a lot of weak structure in this area probably within the auction itself, so I really wouldn't be surprised to see the whole thing repair. However, market has been pretty resilient, pretty strong. We opened on a gap down on Sunday and got right back, bid back up and up into a new swing high from over Friday's high. Right, so watch that Friday's high as well, right in those 820s. They're going to definitely be important. And you can see is pretty much that 840 area there. So 820, 840, huge area if we start to get back underneath. Because right now, as we are, right, that's that previous week high, basically. I don't know if it was the high of the week, actually, but at least it's that Friday high. So break under that. Watch that 765. Definitely potential long there. But if we break under, drop down another 30 points down to the 730s, and then things can get interesting. If we can start getting under 700, 790, right, then we can trade lower. But we have a path here for the Bulls and the Bears, so that's what I'll be watching here for the rest of the week on the nastiness. All right, let's move right along here. And I don't believe I have it in my flexible grids, so I want to just pull up RSP, take a look at that on the big screen. Okay, I love to look at this here for breath. Let's get it on daily. Okay, not as strong today as the SPY was. But overall, I mean, still holding over 195, really no issues. So I can't say too much of that being a concern. Under 92.40 though, that's when things really get interesting. Well, let's throw up a level here just to have it. Definitely noting not as strong of a candle as on SPY. Okay, get into the flexible grid. All right, well, we just open it up to gold and it's on the dollar. Okay, let's just talk about this really quickly since we are here. Okay, definitely, this is, this move in metals is just out of control. I did do a little bit of I did do a thread which had a little bit talking just about the gold and the dollar, what's going on right here, and wanted to kind of mention it here, what's going on with this move coming on, just really a historic run in the metals. And, we're really going to talk about, de-dollarization going on here. And it's about, really money not losing confidence in the overall dollar here. And we do have BRICS and, other nations talking about, getting off the petrodollar and things like that. Now, Trump's political moves in Venezuela may help stop that or maybe slow it down, but a lot of the nations are looking to get away from the dollar, and this move here, I personally think that we're seeing some massive devaluation, and we really have not been able to get over $100 here. So from this technical standpoint here, we break this 86.30. Watch out. I mean, I'm thinking we'll easily probably see $90 again here on the dollar, and it's not even oversold yet, and we're right at the bottom of the range. So to me, I think that this is just a big shift here going on globally, and we really just have to be careful. This is a giant warning sign, and as the dollar moves loses its value, it's really not good for us overall as a country. But we'll see what happens here with Venezuela, as I'm sure that's going to, we're going to get more updates on that. But this is a big hedge here against currency risk that people are seeing with the dollar. So let's just keep a big eye on that overall. I'll probably do a thread on Twitter about de-dollarization here maybe this week, so look out for that on my Twitter. I will put a link in the description. Okay, let's move it right along here. Let's look at some VIX and some put call ratios. Now I would expect VIX to increase a bit. Watch for that implied volatility to increase on your options as well as we move into FOMC and major earnings. So watch, VIX probably will start to creep up, but it might be just artificially inflated coming into these big events this week. All right, nothing really here either way on the put call ratio. That's that concerning. 1575, we've talked about this at nauseum as a big pivot here. So as long as VIX holds over that, we still have the potential here. Maybe we're trying to create a little bit of a buy side curve, and it could be a bear flag for sure, but still holding the pivot, and we could see VIX rise up as long as it holds. 18 to 20, or excuse me, 19 to 20, still definitely in the views for VIX, which would be great. Okay, let's take a look at the 10-year, probably not doing much, but we'll look at the one-day VIX. Maybe what I need to do is get a split screen, a floor screen for the one-day VIX, the VVIX, the VIX futures, and the regular VIX. I think I'm going to do that. Well, the one day could be a little bit lower, but almost in complacency. Had a shot. A bit overbought here. Maybe this pops up to 10, but I don't think it's low enough really to signal to me going to have an explosive move, to be honest with you. Let's take a look at some breadth metrics here. How many stocks in the S&P are trading over there? 50. Okay, still at 69. Not bad, 69%. I was watching as we got closer to that 75% ratio. Not quite, didn't quite get there before seeing that pullback. I did throw out some warning signs about a little pullback coming in the market, but bid just right back up. It's still over 50%. No really issues there. New highs versus new lows. I'm going to guess this is going to be at 150. I'm going to say closer to 100. Nope, still above zero. Came into the 270. That's where we saw 275. That's where we saw that pullback in the market. But bid up again. Would want to see this flip green, but still over zero, so no issues there. Start to take a look at some bonds. Take a look at the HYG in isolation, and I think we did have a bullish red flag today. Okay. Kind of repaired itself. All right, back in lockstep. Over the weekend when I looked, we had a little bit of a divergence. Oof. Okay, that's repaired. All is well there. Looking good. Let's put the rest of the bonds. Okay, shortest term. Coming back here. Did try to break down, but coming back might retest that trend line and then come back over. Same thing here with the shorter term. 5 to 7. This is 3 to 7 here. Getting back over. So fighting back valiantly. But let's see another daily close over 119. Otherwise, I don't count this quite yet. And this could just reject this same situation. This is right at a point where you'd consider a short. And so is TLT. So 30 year, right? 10 to 30. Coming up into 88.40. Could just see this reject and TNX go up higher. Put bonds fighting back a little bit today. Let's take a look at TNX. Could imagine it was down slightly. Yep, let's see if it holds that 4.2. Could come down a little bit lower. Bounce right there. And that would kind of support the bond short theory. So both spots coming into a big area. Dollar, we already went over that. Just been getting melted. And we'll see the federal funds rate will update soon. Let's take a look at credit spreads really quickly. See what our risk appetite is. And we got our bond ratios. The last three credit spreads. Risk on, under the 50. Looking good there. Would want this bond ratio to kind of come down a little bit. Longer term though, coming down, that is good. Let's see how these react as they come down into the 50. But longer term breaking it. So that is kind of mixed, but this bottom one being below actually kind of, to me, would invalidate potentially being short on the bonds. Because it looks like if this stays below, then TNX will continue to fall. And oil, actually, I was taking a look at the oil volatility starting to perk up. I thought that was interesting. Kind of off this 26. Came right into this highs at the 58, but let's see if it starts to get over 58. Definitely getting perky here on the oil volatility. And that could be interesting. Anything over 58, we could see some big moves in oil. See the volatility come back up. That would be interesting. Nothing, no warning signs on the skew. I would say overall everything looks still a bit bullish overall. No bear warning signs to me. I think we went over everything. Okay, perfect. Yes, we did. All right, guys. Well, that's all I've got for this week. Continuing to watch this move in metals and the dollar as a macro kind of a viewpoint there. Let's see if bonds actually catch that bid or we see the bounce on TNX. Otherwise, everything's looking good for the bulls on the market. Slight area of concern and potential breadth issues here with RSP and SPY. Maybe I'll make a something where we can just look at it really quickly side by side, because I think that will be helpful for us as well. Either way, that's all I've got for this week's market update. Let's see what we get. Big week ahead. FOMC, PPI, Microsoft Meta earnings, and Apple. And then next week we have even more coming in with some of the other names. I think Amazon and Google still have yet to go, and some other lower tier names, but should be interesting nevertheless. Again, my name is Shark. Thank you so much for joining me. Remember, a prepared trader is a profitable trader. So plan your trade your plans. Thank you so much for joining. If you haven't already, reminder, means a lot to me. It's for free. You can sign up here and subscribe to the videos, and that's all I got for you. So good luck for the rest of the week, and we'll see you probably in the beginning of the month and see what we look like in February from the broader context. All right, guys, signing out. See you out there in the markets. Let's have a great week. Take care.